Now we'll discuss internal controls. Moving forward, sales, receivable, cash, receipt cycle. So we'll see who is responsible to putting systems in the company. This is the first. Then what will be the flow diagram that we will see, the best one to get a more efficient sale and purchase or other activities. Then we'll say sales receivable related transaction, and if we do the thing from IT, from system, so you will see it will become more easier. Manual system always takes more document work and more delayed in dealing with the people. So nowadays we see the system effects. Okay, what management is responsible? In general, management is responsible to buy a software. Management is responsible to put a credit department who will choose the customers based on certain criteria. They will do the verifications. So we should not have bad customers. We should have effective, smart and paying customers. This is the purification that they will do. They should have a system like this. Then company should define, management should have a format of purchase order, right? Then sale order, then quotation for sale, for purchase PO, sets documents with a defined system of who can make, who can approve, who can issue, who can buy, right? This is in general. So we should have a proper acceptance of customer order, granting a credit approval, safeguarding of asset with the sale, timely shipment, billing for shipment, accounting for these receivables, recording, depositing cash that we receive. This is all is the responsibility of management. Different departments will be involved. They will have different forms and procedure and authorizations and approvals. Yeah, so in American economy, we have a slight different kind of organizational structure, right? Maybe in other countries you will see everything is under CFO, but in American atmosphere we have a different organizational structure. You can see that sales department is looking for sale order, customer relationship. CFO is looking for mail room, credit management, cash receipts, cash payments. So more treasury work is under CFO. Here you have a controller who is reporting to CEO. Everyone is reporting to CEO. Cost accounting, timekeeping, general ledger, payroll, account receivable, payable, inventory controller, billing, all this comes under controller. So controller is the most important actually, who is running the internal organization affairs, matters in some of sale, purchase, other things, right? So here we will put the internal controls. Then we have human resource, manufacturing, they will do shipping, receiving, and this is how the hierarchy is being divided. So it says auditor responsibilities and segregation of duties are very important. They should understand the entity, organizational structure, and always when we do any kind of system, we should know that there is a cost benefit analysis. If I do something which costs me more, benefit comes less, so this is not a value added activity. Now who is responsible for who, right? In a sale process, we have sales. So sales department will deal customer order, credit will approve, inventory will check the inventory is available to dispatch, shipping will dispatch, actually billing will do their bills, account receivable will create a receivable, mail room will open the checks, there will be a cash receipt, we will have a debit credit through ledger, and we will have a receiving department. So all these people will be involved. If you see this diagram, same diagram put into, these are the departments, right? And he's saying this is start from here, customer order, we prepare, and you can see 1, 2, 3, 4, 5, 6 copies, because this is manual, right? It's a sales receivable manual. So you will have lot of copies, it will flow here and there, and then in the last money will come and you will deposit into the bank. So this is a flow chart, flow diagram. Keeping this diagram in view, I can easily see that what is the process flow, and if I have any objection, I can raise on this flow diagram. Yeah, so he will explain that it will start this credit, same as I told you. So just we can skip shipping, goods and services. Bill will issue, prepare the ledgers, and this is how it is going. Now, when we will have a sale, after a agreed period, customer will pay us, right? So we will have cash receipt manual system, means where you are using the physical registers. And you will see again, customer will send a check, mail room will open, they will make a daily receipt. Then step number 2, checks, then it will go to the cash receipt. Then account receivable will adjust, controller, and this how in the last it will be added in the bank. So this flow is comprehensively clear. Yeah, this is now he will define, it will start mail room, cash receipt, general voucher, this all will be step. And 2 clerks will be present. Yeah, now he is telling you more internal controls, that 2 clerks should be present in the mail room so they can open. Checks are endorsed for deposit only. So maybe if a customer send a check without account pay only, so we should at time make it sure all cash is deposit instantly. So sometime management has a policy, today cash will be deposited tomorrow. Some will have 2 days, depend how close the bank is, how much manpower you have, you will define accordingly. Periodic reconciliation will be done. Monthly statements are sent to customer to ensure failure to receive. So we will regularly send statements to the customer for balance verification, for statement matching, right, left, debit, credits, so that will regular basis, it will help us to avoid any issues with our valued customers. Logbox system, we study generally in BEC that we want to speed up the collection procedure, and want to reduce the floating period when a customer has paid and money is not yet credited to our account, right? So logbox system, when we introduce it, speed up the receipts collection and deposit in the bank. So he says that we can use some segregation of duties, use compensating controls. Compensating control means when you don't have a fleet of internal auditor, you give additional job to the next level of authority for further checking. So every level checks the work of the other work. So it clear a compensating control. Increase supervision, do customer audits, and bond your employees responsible for handling cash, because cash is really important. So we do have other sale receivable related transactions, for example sale return. So who can approve the sale return, right? This is very important. Approvals, then separate approval of the credit memo related to a sale return or allowance, approved by someone not in the sales department. So if a sale manager, he is handling everything, he is allowing sale returns, this is very dangerous. So we have to have a separate person who will keep a record, and he will investigate, or you can say rationalize and approve if it is a genuine returns. Now this is a computer system flow chart. So unlike the manual, you can see it has very less department, because ERP is using a central database, right? It's connected with all the modules: accounts payable, inventory, sale order, receipts, banks. So in one central database you can handle, no need make 5 copies. If I have access to the system, I can pull. Suppose I want to make a payment, I'm a payment guy, or I want to receive the payment against the invoice. So invoice will be showing there. I will just pull the number, it will come. So in computers, it becomes more easy. So you will see it is a more clear and clean. Process remains same, of course. It start with customer order, then there are some databases we define for accounts payable, inventory. These are individual databases but connected to a central databases, and the process flow goes the same, and we deliver the goods when the money will come, again we will have an automated system.